Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined by Nicole Dines. And of course, the headlines over the last days have been dominated by the sad news of the passing of Queen Elizabeth II, the world's longest serving monarch, having reigned for 70 years and seen very much, certainly here in the UK, as the end of an era. I learnt the news on the Eurostar heading back from the EPRA conference. But Nicole, looking at the real asset side, what have you been following this week?
Well, Real Asset Media held a briefing in Brussels, both in person and online, on Trends 2022, global outlook for real estate sector. And the consensus of our experts was that there are obviously many headwinds and market challenges. We all know about inflation, supply chains, and interest rate rises. But despite all these headwinds, the real estate sector will continue to attract capital, and it's forecast to end the year on a high. There are huge levels of volatility and uncertainty in the market that haven't been seen for over 20 years, said Thomas Veit of PwC. But global allocations to real estate continue to rise. Because equities have fallen, of course, investment managers are investing more in real assets. And Byron Carlock from PwC as well had a sort of US outlook and said that because of the uncertainty, people want something that he said they can touch, feel and hold. So there's that value to real estate. Plus, he said the very challenges that are facing the sector makes it a very exciting time to be there because there are so many opportunities. Because many investors are still choosing to sit on their hands, the ones who are active can really find opportunities in the market. So there's a real hunt for opportunities. From a US standpoint, obviously the exchange rate, it becomes a currency play. The exchange rate, record lows of the euro and the pound against the dollar obviously makes Europe a real bargain. So that's an added incentive for US investors to look at European markets. And Thomas Veit said that the figures now don't look good. Transaction volumes in Germany were down 40% in the last quarter from the same period in 2021. But he's very confident from what he's seeing that past this period of months of uncertainty, the market will pick up towards the end of the year. And another interesting aspect that was highlighted by our experts at the panel was that the real estate sector is taking on a more important role, kind of more social role than it has played in the past. It's being called upon to provide solutions to social and environmental problems, creating sustainable communities, affordable housing, transport infrastructure, rethinking our cities, walking and cycling lanes, and sort of this whole reinvention of the built environment, which obviously in line with ESG principles. So managing to green is becoming more and more of a focus. We've spoken about it many times before, but it is becoming a focus for everyone. And that is really changing the role, becoming real estate is taking on a much more important role, which would be very interesting to see how that plays out across Europe and the world. And another aspect that was highlighted was that logistics is becoming even more attractive. We know logistics has been the great success story of the last few years, but it's becoming even more attractive to investors because of the focus on sustainability. And Pete van Poppel of CBRE Investment Management said the large listed buildings have this innate disadvantage of having large roof surfaces and make it much easier to install solar panels, which can be an issue in other buildings, certainly in cities. So they're generating clean energy, as well as showing their environment, their sustainability credentials. So he said everyone will want more logistics assets in their portfolio. And for this reason, he forecast that double-digit rent increases that we've seen, up to 40% in the UK, but double digits across Europe, will continue, he said, for several years, not just months. So very positive outlook for logistics. And also retail, which obviously has not had a happy time recently. He said it's really coming back because of the capacity of the sector to reinvent itself. So maybe the high street is still in trouble, but consumers are still spending money. They're just spending it differently. They're choosing to experiential opportunities. They're choosing leisure, beauty, health, fitness, rather than traditional shopping, but they are still going out to spend their money. And retail has shown that it's able to adapt its offering. So Carlock of PwC said that he's not at all as bearish on the sector as he was a couple of years ago because of this capacity to reinvent itself.
Yes, it was a really interesting discussion in Brussels on that global outlook and the uncertainty around inflation, interest rates, geopolitics, and the global economy. And they were very much talking points for attendees in Paris for the EPRA conference. It was the first time in 3 years that the listed sector had come together. And it was good to get the perspectives of both European industry leaders as well as those from the US It was noticeable that in the midst of the conference, the ECB raised rates by a record margin of 75 basis points, almost as if to underscore the grim economic situation highlighted in the opening keynote by Professor Nouriel Roubini. This was matched by an equally challenging world picture in the second keynote from Anders Fogh Rasmussen, former Danish Prime Minister and former Secretary General of NATO. Interestingly, in our interviews with both speakers, there was a big focus on sustainability, both in terms of a bigger focus on resilience against climate change, but also using the current energy challenge to transition to a green economy, supporting both energy security, but also to lead the way on climate goals. I'd say the overall mood of the conference was understandably uncertainty, but there was also a growing focus on alternatives, including healthcare, self-storage, data centers, life sciences, and the slightly more positive news from Professor Roubini that inflation could make real estate more attractive from an investor standpoint. In our newsline, I noticed M&G starting a £200 million mixed-use project in central London, Helical selling the London HQ of TikTok for £158 million to a Hong Kong-based investor, and Grosvenor selling a build-to-rent project in South London to Greystar and Adia. Patrizia made a €70 million debut in the PBSA market sector in Italy, and also in Italy, Coima are developing a fashion hub in Milan's Porta Romana area, picking up on some of the more positive stories actually emerging around retail. And finally, picking up on the themes around infrastructure, Golding Capital Partners raised over $1.5 billion for its two infrastructure funds and is already planning to launch a dedicated investment strategy with a special focus on energy transition. So the news really reflecting some of the trends we've been discussing in Realcast over the past months. Thank you, Nicole. Thank you for joining us. And you can access all the episodes of Realcast at realassetinsight.com.